welcome to the second session of the 2022 Investment Challenge on this cold and wet Friday evening. Today we have Bini on with us, and she's going to take us through risk management, trade management, and trading plan. Without further ado, Bini, the stage is yours.
Hello, thank you. Thanks, Fook Kwan, for introducing me. Hello, all of you. How are you? Today is a Friday evening, right? So it's nice to see all of you here on a Friday evening. So I hope that to make your Friday evening very interesting. So I'm just going to cover some war stories. Okay, so very important aspect. So if you aspire to trade, to invest, I think that apart from having a trading strategy, you really need to be aware of risk management, trade management. It's a very hard topic, but if you talk to any traders, any investors, any seasoned traders out there, they will tell you, hey, look, risk management, money management, that's the most important thing. All right, so let's before moving on, so let's take a look into the disclaimer. Whatever that's covered and going to be covered in this particular session, they are not financial advice because I'm not qualified to provide one. Do note that trading bears high risk, so you should always be aware about it. All right, so let's take a look at the agenda. Today, the session is about 1.5 hours, so I think we should end the session about 8:30. So I'm just going to go through what's the trading plan and to break down and as well as to share stories, okay? I think all these are very interesting stories about pre-trading plan, during trading plan, and after trading plan. All right, so today I have myself and also Fook Kwan from CIMB Securities who are going to share what I think as war stories. All right, so hopefully we can learn together. And second part would be how to screen for trades. So I'm just going to share with you how I screen for trades and as well as a subtopic is about hedging. All right, so if you do have any questions, you can ask me at the YouTube chat. All right, so I'm actually looking to my left-hand side on the other screen on the the comments that you have. All right. Okay, so a little bit about myself. I'm training for SGX, so I'm a SGX Academy trainer. But at the same time, I do my own retail and institutional training. So I do travel quite a fair bit into the region, Hong Kong, China, Malaysia, Indonesia, Brunei, etc., to do my training, especially for the corporate side. So I do a lot of corporate training with the brokers, with the exchange as well. But on my own personal level, I am like you guys, investing and trading at the same time. So one of the key things about my own trading is they are very much automated. Automated means that from the point of entering to management to completing the trade, they are automated because I do a lot of work also on automations with a lot of major clients. I develop a lot of algos. But today, the more important thing is to talk about trade management. So one of the key things I want to talk about trade management is, if you take a look at my own wealth approaches, is I have multi-prongs. That means I don't only trade, all right? I have that passive income. I have that variety of trading instruments. For example, in the morning, before the Singapore stock market opens, I'll be looking into the futures market because I also trade into the Singapore futures market. Then I'll be taking a look into the Singapore and the Hong Kong market as well. Then after that, we'll be into the indices, into the US market. I do not a lot of US stocks because my students will all know that by 10:30 or 11, she has to go to sleep. Yes, it's true. Unless I'm working with clients in US, otherwise I'll be sleeping about 11 or 11:30. Okay, so I don't really do a lot of the US market. Okay, I do have stocks there. I do a lot of options as well, but they are of different strategies. I don't need to look at the market until about 1 or 2. Okay, now one thing I emphasize a lot is exercise. Okay, so ever since I hurt my foot, so I've been swimming every Tuesday, Thursday, and Saturday. Why is this very important? This has a huge implication on your own personal trade management. And then on the cardio side and the stretches, I do every Monday and Wednesday, Friday. So if you take a look at the whole wealth I don't think that I have a question for Matthew. How much do I earn since I started? I think I can only share with you that at age 35 to age 38, okay, 35 to 38, right? I actually retired, okay? That means that I say, okay, whatever that I'm making right now, I don't need to work anymore. So I actually stopped working for 3 years. And that's quite well known in the industry. But during these 3 years, I tried to call every day my friends to come out, hey, let's go and drink coffee, tea. Until one fine day, they get so impatient with me because I've been like disturbing them. Okay, I realized that this shouldn't continue. If you ask me now, can I stop working? The answer is actually yes. Okay, so that's the portfolio I've grew, all right, until the point that if I don't want to work right now, and I will retire to the beach, okay, then that can be done. But I don't want this to be my life for the next 20 years, okay? So if you take a look at, for example, Warren Buffett, you ask him, can he retire at this age? Yes, but he's still very active in the market. That's how life is to different people, all right? Okay, so let's talk about trade plan. Now, the difference between new traders, okay, versus very seasoned traders. Okay, they will tell you that it is not the strategy. Okay, it is not your trading strategy that's most important. All right, it is how you execute your plans. Okay, end of the day, it boils down to two things. One, trade management, money management. Maybe this is too difficult to understand. You say that, hey, look, if I have a wonderful trading strategy, I just have to follow the rules and then I'm going to make the money. Okay, but this is not true, because if you think in terms of psychology, so let me just ask you a question. If you have this strategy that is going to make a 100% return, okay, 100%, but however, first time you will be a losing trade, okay, second time it will be a losing trade, third time it will be a losing trade, okay, fourth time it will be a losing trade. All right, so think about it. What happened to your psychology after the fourth time? Okay, would you be willing to do it again? And bear in mind that every time when you are making losses, you're making a huge amount of your losses in your account. Okay, so after the fourth time, all right, you are making losses. It's only the fifth time they're going to make back the money. Okay, so that fifth time, you're going to make back 100% of your money. All right, so think about in terms of psychology, how would you manage that? Okay, so a lot of people don't understand that issue of trade management or money management. All right, they think that they are able to do well with the trading strategies, and that's where you start to hear even the gurus telling you, this is the third account that I've busted. Okay, so in terms of professional traders, what we always do is that we understand that there is no holy grail. We understand that there are systems that we need to build, but within that system, all right, what we aim to achieve is consistency. Okay, that's number one. Number two, right, it's the risk that's most important, because if you can keep your risk constant and never let go of your psychology, that means, right, you don't go and gamble. You don't think that this is going to be the right trade and this is going to be the trade that's going to make back all my money. Okay, and you have clear rules. Now, when I talk about clear rules, right, getting bored with your system, that means be very bored with the system. It's very important, because I get bored, right, with trading. That means that every time I just have to keep on repeating that same process. Okay, and then that's where the money comes, right? You have to do this kind of things until you get so bored that you say, okay, I can smell the trade already, and let me just take it. If I lose it, it's just another one more trade. I'm just going to start all over again. All right, so traders will know that there's a process to follow. They have to follow the rules, and there's expectations to say that there's no quick way to get rich. All right, so even at my stage right now, where I don't need to work, all right, I also don't flash the wealth. Okay, so if you ask me, for example, are you a millionaire? I will just laugh. No lah, you see, I'm cycling. Okay, because in no way that no one will tell you how much you're earning in terms of your salary, right? Okay, tell me how much you're making in terms of your salary every month. Nobody says that unless that they are very good friends. Okay, so to me, All right. We want to be very patient, very reasonable with how much that we are going to make, including, okay, the expectation that there will be losses. Yeah. Okay. So that's the difference between professional traders, investors versus people who are new to this investment. All right. So if you ask me what is a trading plan, okay, the trading plan is very different from a trading strategy. All right. So what you did with Tom, he did that trading strategy, but the trading plan is broader than the trading strategies. It encompasses, your thoughts. All right. It encompasses how you're going to handle the emotion. What happened if you fail? Okay, that's very important, right? So that's inside the trading plan. Including the trading plan includes your trading strategies, okay, including how you execute your trading strategies. Okay, so this is the purpose of today's session. Okay, what myself and Fook Kwan will be talking about. All right, so why is it important to have a trading plan? Very important. Okay, just one thing that you need to know, all right, is to prevent you from busting your account. Okay, I don't want to pretend to say that you can make a lot of money, because in my career, all right, whether to deal with professionals, whether it's working with some of the family offices, or whether it is to work with retail and traders or investors, many of them don't succeed. Okay, many of them had to bust their account. Many of them jump from lessons to gurus to instruments. Okay, but what they didn't realize is actually they have to look inward, all right, to understand why they failed. Okay, and many times when they first started, they didn't start off with a trading plan. Okay, so this is very important, because trading plan allows you to manage your risk. Risk control is the very important thing. Now, imagine if you don't manage your risk, all right? And if you have, let's say, 100,000, you're going to lose all your 100,000, then you don't have any bullets anymore, okay, to continue. Even if you have a very good trading strategies, you don't have any bullets anymore to do it, all right? Now, you realize that along the way, when you are trading or investing, it deals a lot with your emotions. It deals deep down that it's going to bring you all the demon out there, all right? When you look at people who make money, okay, and especially, they will show you their cars, they will show you their house, they will show you the money that they have, right? But do you realize that all these monies that are being made, okay, they come with a lot of pain inside? Why do I say pain inside? Because when I first started, I didn't start off in a good market. When I first started, I had very, very wonderful environment. Why was that? Because I remember when I first started was 1996. Okay, I was still in the school. Okay, I was in my JC. But following which in 1997, that's where we have the Asia financial crash. So I made a lot of money before that. Okay, because then I don't need to have a lot of skill, because I just have to buy the stocks, keep the stocks there for a few days or few weeks, then the market will automatically move it up, because it was such a bullish market. But when the Asia financial crisis came, right, everything went haywire. Okay, because you really need to have skills, you really need to have a plan, you really need to have discipline to get back the money. Okay, so I started with a very good environment, and then I lost actually a lot of money. All right, and worst thing, right, that's not my money. Okay, so I went through a lot, and that's also the reason why I don't flash the wealth. Okay, now so let's talk about trading plan. Okay, what I've shared with you today, all right, it would be stories. Okay, why they say stories, right? Because all these things you can't find it out there. Okay, but these stories are different to different people. Why I say that? Because you can have your pre-trading plan, you can have your during trading plan and after trading plan, but how are you going to execute them will be different, and you have to find your own way to handle yourself, because you know yourself most. Okay, so I'm just going to share with you my own trading plan. Now, today, after 20 plus years of trading investing, I no longer write my trading plan, because my trading plan is all planted inside me. That means I know automatically before I trade or before I invest, before I do anything, all right, I must do this, okay, because all these are carved tattoo inside me because why? Because all these deals with a lot of pain, a lot of nights, right, that I ponder and try to understand why things doesn't work out, and a lot of stress there. Okay, so let's start off with the first part, which is the pre-trading plan. Now take a look at this picture here. So this is the place where I would exercise every Monday, Wednesday, and Friday. Okay, because I make sure that the first thing that I start off with my day is to take a walk in the park or to at least go to the pool for a swim. Okay, because I always start off my pre-trading routine, not by looking at the market, not by waking up and sitting down on the table, right, to go and take a look at the market. No. Okay, my day starts early, about 5:50, because I have to send my children to school. All right. So when I hit the pool or when I get to the park, it's about 7:15, 7:20. All right. So between 7:15 to 7:20 until 8 o'clock is where I use it to clear my mind. Okay. Even with, let's say I have made losses last night, okay, or yesterday, or this week. All right. So I see this as a pre-trading routine that I have to do every day. Okay, to get back that momentum, okay, to make sure that today is another day to fight, right? Maybe perhaps that you think this is not important, all right? Maybe you think, hey, look, why are you sharing with me the exercise that you're doing, the things that you are using this to clear your mind, okay? Because when you really get into the real trading, okay, or investing, and especially with a lot of money at stake, okay, that means that your loss is not $10, $20, but you're talking about that a potential loss of 10,000, 20,000, 50,000 a day, okay, because I ever tried losing 300,000 a night. All right, so that's the type of stress, right, that you're going to have. So you want to clear your brain, okay, to reduce that stress. All right, so you have to decide what is your pre-trading routine. All right, that includes even drinking a cup of coffee if that helps you. Okay. Now, second, why I say that you need to have this never break vow. Okay, this is very important, right? Because when I first started in 1996, I actually used my parents' money, okay, my mother's money, okay, without my father's knowing about it. All right. So when you make money, nothing will happen. Not a lot of problem because me and my mother actually trade together. Okay, but when things goes haywire, all right, that's where a lot of things is going to happen. All right, because I felt very guilty, all right, to lose so much money. Okay, especially these are hard-earned money of my parents. Okay, so because of my experience, okay, one thing that I will never do is I will never use my relatives or my parents' money, and I will never borrow money from anyone else, all right, to go and trade or invest. Okay, all the monies, whether I use it to do for my bonds, for my mutual funds, for my stocks, or for the trading, whether it's into the CFDs or into any instruments, they are all my money. Okay, and I never take my children's ang pao money as well. Okay, I keep them in the bank. Okay, so every time they receive that ang pao money, it's always kept very safe. So I have like a split profile. Okay, different profile. My money, I'm going to trade it, okay, and I'm going to invest it very aggressively, okay. But at one side, okay, I always have a backup plan, okay. What's a backup plan? I always make sure that there's another portion of my money is kept, right, where even if something happened to myself, even if my trades doesn't do well, all right, that part of the money will give me that recurring income. Okay, so if you ask me, for example, my portfolio, they include mutual funds that gives out routine payout dividends, okay, REITs that gives that dividend, bonds as well, and stocks with dividends, okay, and as well as property. So all these, are giving me that recurring income, okay, and that's very important. All right, so write down your never break vow, okay, things that you would never happen, okay, especially when you are investing or trading. All right, now define your goals. It's something where everybody will want to have. So for example, I say, okay, I want I don't want to work. Okay, so therefore, when I trade, I hope that I get enough money so that I don't need to work. All right. So some people say, I don't want to be staring at the screen. All right. And because, you know, in my job, I kept staring at the screen and I don't have my life. Okay. But, you know, I have students when before they came to me for training, they were staring at the screen for 18 hours, 20 hours. Okay. Why is that so? Because they are into this scalping trade. Okay, so scalping means that you have to be always there on the screen to catch that very fast trade. Okay, so they were there on the screen eating that Maggie mee in front of the screen, drinking, you know, instant coffee, never leaving their table because they were there staring at the screen, waiting for that scalping trade to happen. Okay, so they did that for few times. Okay, that means quite a period of time, and then they realized that this isn't what they wanted to be. Okay, they want to get financial freedom, yet they realized that by doing that, they were trapped watching that screen. So they came to me and said, hey, look, you know, am I doing it right? So I just asked one question. All right, is that the lifestyle that you wanted to be when you first started with? Okay, is that your goal? All right, if this is not your goal, then it's time that you make a change. Why? Because if you don't do that, you're going to realize, how are you going to continue that with another 20 years or 30 years? Because by then you'll be reaching that 60 years old. Okay, perhaps that your eyes can't see properly anymore. Okay, so I changed a lot of my trading style also because of things I realized. Okay, there was once that a period of time I was trading into the US futures, okay, the Dow futures. It's very good market at that point of time because sometimes if you get a 300 points movement in the night, okay, and then that 300 points movement, if you, let's say 1 point is equal to $5, 300 points will be equal to 1,500 USD in just a few hours. All right, so I was there trading into the US market, and you know that US market starts at about 9:30 to 10:30, depending on the daylight savings. Okay, so suddenly one fine day, I realized what happened at 12 a.m., 12 midnight. There's always this dong on the table. You know what happened when you heard that dong on the table at 12 midnight? Okay, it means that I was waiting and waiting, and I actually fell asleep. Okay. Because it has been a long day for me, right? Because I started the day with looking at the Singapore market, and then I thought I look at Hong Kong market, and in the afternoon I thought that I look at the indexes, I look at into the commodity market, and then at night I still want to go and trade the US futures, okay? And because I need to be there to wait for the signal to happen, all right? So I couldn't leave, I couldn't go to sleep, and every day, every midnight, 12, you know, I can't stand it anymore. I was so tired. I was so burnt out that, you know, I just fell asleep on the table. So dung means my head was actually on the table already. Okay. So be reasonable in your goal also. Okay. What you want to be. I have people who come to me and say, hey, look, I want to be a millionaire. I say, okay, you want to be a millionaire in a year. All right. And then how much capital are you going to start with? They say, oh yeah, I have only 20,000. But I want to be a millionaire. Okay, I want to make $1 million in a year, but I have only 20,000. Okay, so do you think this possible? If you look out, okay, if you look at the amount of return, right, from 20,000 to $1 million, that's how many percent? Okay, so you have to be very reasonable in your goal. Okay, what I suggest is that write down one very important goal, including things like what is the hot markers. Okay, what is hot marker? Markers means that when you need to stop. Okay, so you can't be continuing into a losing business forever. Your money is limited unless they have unlimited money. So when you write down your goals, write down what are the things that would say to tell you that you need to stop, you need to take a pause, you need to look back and consider. Okay, things like, for example, I bust my account for the 3rd time. I need to stop. All right, so these are all very important things that you have to put down in your trading plan. All right. Okay, next one is market psychology. When I talk about market psychology, I could just talk about it like a day or two. I could just share with you how the market is, it's so bad to me, and then why the market is always right, what happened, and this was how when I trade that, and this was what happened. All right. But if I can just sum up, okay, the most heartfelt things that I felt throughout these years is you have to know, okay, the market is always right. All right. Now, if you look at what Warren Buffett said in one of his interviews, he said that he spent his first 8 years of his career, all right, he was trying to predict the market. What was he trying to do? He read this technical analysis book by Edward and Maggie, right? And he think that he could predict the market. Okay, so for that 8 years, he was trying to predict the market, and he realized that that's wrong. Right now, same thing. We can have an understanding of what is happening in the market. We can read the news. We can, try to interpret the news. But please don't think that you are better than the market. Please don't try to predict the market. Okay. When I say react, it doesn't mean that you are slow to react. When I say react, means that don't be a commando to rush in to think that the market is right now at the rock bottom already, and you want to go in and to pick up the bottom. All right. When I say react, it means to say that, okay, after things has reversed according to my trading strategy, then I will go in and to do something about it. Okay. Now, next one is this trend. There's a saying to say that the trend is your friend, right? Always follow the trend. Okay. But to me, I've seen, many people, right? Many smart people. Okay. Smart people means that they are really very, very highly educated. And in fact, I started the same as well. Okay, so I had a master's in business, and I thought that I'm actually very smart. Okay, so when I studied, all the methods that I know from books, okay, I say, okay, this one, I think it's going to stop going down already. It's going to go up. So let me just put in the trade here. And then when I put in the trade, it keeps on going down. I say, okay, I think that's it already. Let me just put in again. All right, and I just keep going down, and I put in again and again until I have no more money anymore. And I realize that, hey, look, I'm actually totally wrong. Okay, don't fight the trend. Let the trend happen first. Okay, so go and understand how to, analyze the trend and then react to it. Okay, so that's very important. And always one thing, right? We don't have unlimited money. We have limited money. Okay, so that's very important. Okay, when you have unlimited money, make sure that you have bullets left for that very easy market to come. Okay. All right. Now, one very important thing, right, where you'll hear a lot of people say is your psychology. Never let your psychology get over you. All right. In any way. And one of the worst psychology that ever happened, all right, was when I was scalping the market. Okay, I'm not sure whether you heard this term called scalping. Scalping means that you are going into a very low time frame, all right, and then you do a lot of trades in a very short period of time. Now, when you are correct, that's where you can make a lot of money. Okay, because when you are doing scalping over, let's say, a 1 hour duration, we can be doing like maybe 10 trades or even 20 trades. And if you do a huge amount, okay, of trades, and if they are all correct, that's where we can make a lot of money. Okay. Now, but when I was in my earlier days, when I was scalping, one thing that happened to me, all right, I realized that my anger, that means that when I'm wrong, right, I will keep on hitting that trade and do revenge trading. Okay. What is revenge trading means that I think that, okay, this trade, I'm going to make it back. Okay. This trade is going to be the best trade ever. When I'm very tired, or when I lost that cool already, I just keep on hitting until I say, hey, what is it doing? All right. I can't be actually over trading or doing this kind of revenge trading. Okay. So that's where I decided to stop, to relook. And that's where, it had a turnaround in my account. Okay. So always define what kind of psychology you shouldn't do. So it's good that, for example, you can write down on a piece of paper. If I find that I'm losing my temper, if I find that I'm scolding my children, or if I find that I'm actually doing revenge trading, if I find that I'm quarreling with my girlfriends or boyfriend very often, all right, then I need to cool down, I need to stop, I need to relook. Okay, so this part is very important. Okay, so these are the things that you need to do before your pre-trading to define all these out, right, in a piece of paper. Okay, and good that if you can just read about it, good that you can write some stories, good that you can just paste it in front of the screen whenever you are trading. I don't do that anymore because all these are hit right inside me, engraved. Okay. All right, now let's talk about trading strategy. That's before, that's during the trade, right? During the trade when it's happened. Okay, I believe that Tom, all right, my colleague, has highlighted on trading strategies. He's probably talked about how you can enter using certain rules like moving average, using certain indicators. You form your entry. So you need to write down your trading strategies. Okay, how do you enter the trade? How do you select the trades? For example, you want to select from the STI blue chips, okay, the 30 stocks only, or you are interested in trading in the US market, you only want to do stocks which are in the S&P 500. All right, so these would be that core thing that's going to form your trading strategy. Then you can define your entry rules, your exit rules, or things that you want to avoid. Okay, so one of the things for me, right, when I trade, which I always avoid, is what? As a non-farm payroll on a Friday. Okay, because if you look at the US non-farm payroll, it's one of the key data. Okay, and that data always happen on a Friday at either 8:30 or 9:30. All right, but it's important for me to have a rest on a Friday. All right, imagine that if my trade goes haywire, I still have to deal with it at 9:30 on a Friday when I'm about to close shop for the week already. All right, so these are things that I will write down. I don't write down anymore, but these are things that define, and my colleagues, my students know about it. Beanie, don't trade the NFP. Okay, so that's very important. All right. One of the things a lot of people skip is that exit rule. Okay. For example, when you have a profitable trade, all right, that money is not yours until you put it inside the pocket. So you have to also know how you can put it inside the pocket. Okay, so exit is very important. In fact, that a lot of people who succeeded, okay, they have fantastic exit rule, including when to cut loss. Okay, because cutting loss is a form of exit. While cut loss is painful. All right, if you don't cut loss, you are stupid. Okay, so you have to, put your cut loss as a rule for you to exit the position. All right. Okay, so for example, when you talk about trading strategies, you can define what kind of stocks you want to do, what is your time frame. As I said before, right? There are periods of times, in my younger days, I did a lot of scalping. So my main time frame was 1 hour, 30 minutes and 5 minutes. Okay, but I no longer do that anymore. Okay, so I do a slightly shorter, trading. All right, so the main time frame that I have, if it's investing, is a week or day. If I do short-term trading, that's either a day, a 4-hour, or 1 hour chart. All right, and I don't go below anywhere that's below the 1 hour time frame. Okay. In terms of stocks, for example, you want to go and choose what kind of stocks. For example, I have different portfolio. So one of the portfolio I have would be Singapore REITs. And I don't really touch this part, partly because I actually got them in a lot, very, very low price. Okay. So, and I've been adding them along the way. So these are that recurring income. I don't touch that, but I have actually a portfolio where I trade them. That's usually the Hong Kong stocks and the Singapore movers, right? So that's where I trade them. All right. So you have to define what kind of strategy, what profile you want to be. Okay, so if you know that your time doesn't allow you to be staring and looking at the screen and constantly checking it, then you might want to go for those stocks that's where you don't need a lot of attention. Okay, if you feel happy to receive a sum of money, not a lot, but sum of money regularly at a fixed period of time, then you might want to choose dividend stocks. Okay, so likewise, there are different market conditions. All right, I think that would have been mentioned to you already. Like, for example, you want to do a trend following. All right, that's to follow the trend, perhaps to use some moving averages or to do a mean reversion. You think that when prices move out too far away from the average, all right, you want to do a mean reversion to trade it back to the moving average, or you want to do a breakout trade. So these are the few different market conditions. All right, right now, we are not really having a trend following. So we are probably having a bit of sideway. Then you want to cater your strategy to form a sideway market condition strategy. All right. Trade management. Okay. Now, this trade management, I would explain in a lot more detail. Okay. Especially on position sizing. Okay, so a position sizing is very important. So just let me share a little bit about this one here. So in my automations, all right, a lot of things that when I've designed for the clients, they are family offices, they are professional trading teams or some houses. All right, so what they emphasize a lot is not into the entry. Okay, what they emphasize a lot is whenever the trade is a winner. Okay, they want to know how I can make more money from this particular position. Okay, for the retailer, what they focus on every time is they ask, hey, what is the accuracy of this method? Okay, later on, you realize that accuracy doesn't really matter too much. All right, because when you have a winner, right, when you have a winning position, you want to make sure you keep on adding into this winning position, because people in the market knows that to get into a winner is very tough. All right. So when they have a winner, they will keep on managing their trades, such as to increase their position size along the way. All right. To keep on shifting their stop loss to protect a lot more of their profit. Okay. And these are things that they would emphasize a lot. Okay. So in terms of my automations, right, whenever clients look at it, right, we focus very much a lot into that trade management portion. So we work a lot into the stop loss, when you need to trail your stop loss, when you need to tighten your stop loss, in what conditions you apply these trading models inside, and what situations do you want to add the positions or you want to cut away the positions. Okay. But for retail side, one of the trade management issues that I want to highlight, okay, is the frequency to monitor your trades. Okay, for you guys who have started trading, I think that because when I was in the uni, right, actually we don't have handphone at the point of time. Okay, we were using pager. All right, so how do I get updated about the stock prices? Okay, there's one place I love to visit, and that's the library. Okay, I didn't visit the library to look at books, okay, because in the whole campus, there are only 2 TVs, okay, that happens to be in the library. And in the TV, at that point of time, we were still using teletext, okay, MediaCorp teletext. And teletext, right, page 305, 306, will let you see Singapore and the Malaysia LTC Singapore stocks, right, where they have the high volume, all right, and the high top gainers and the top loser, okay. So the only way, apart from calling the brokers, right, the only way to look at the prices is to go to the library to look at the TV. Okay. And surprisingly, I thought I'm the only one who is actually trading. No, every time I go to the library, every time that screen, that TV screen is always in 305 or 306. That means not on other things, teletext, no other pages except the top gainers, top volume, and the top loser. Okay, so I realized that, whenever I have free time, I will have to monitor my trade. Now it's so convenient to look at prices, such that my students, every time when they wake up, the first thing that they do is not to brush teeth. Okay, the first thing that they did is to take out the handphone and look at what happened. Okay, what are they seeing? The prices, whether they make money, whether they get their position out, whether they get stop loss, stop out, etc., etc. Such that I have one student, not only one, but many, who brought their phone to the toilet. Do you do that for those who are trading? Okay, they brought their phone to the toilet, and then he was in a hurry, right? Then he dropped the phone inside the toilet bowl. Okay, gone that phone. It's a new iPhone, by the way, dropped inside the toilet bowl. Okay, so when you are looking into that trade management, Okay, please don't get into the point that you keep on looking at your phone on your tablet to monitor. Okay, because that's where you know that something is wrong already. Okay, when you are totally comfortable with your trade, this shouldn't happen. All right. Okay, now let's take a look at risk management. This part is a little bit heavy, so I'm just going to cover when you are doing your trade, what's very important in risk management, okay? Because risk management highlights how much risk that you allocate in a trade, and is a very, very important criteria for that success over a period of time. That means that you want to be successful long run, you need to handle the risks. Okay, so let's define what is total risk amount. So total risk amount at any one point of time include the multiple instruments that you are trading, includes the multiple trades. Okay, what do I mean by that? Instrument means that, for example, you are involved in the futures, in the stocks, all right, and maybe in some CFDs. Okay, so that's the multiple instruments you have. We're going to calculate that as the total risk. Okay, and then within, let's say, the stocks, okay, how many trades you have. So that is equal to the total. That's going to add up to that risk that you're going to have. Okay, so let me just talk about two risk profile. Okay, the first risk profile would be people who say, I want to use 2% of my money for this trade. Okay, so that is the risk management via exposure. That means I don't care what kind of trades I'm doing. At any one point of time, I only want to use 2% of my money. So imagine you have 100,000, right? 2% of your money would means as a capital of $2,000. All right, so you're going to take this $2,000, multiply by the number of trades that you're going to do. Let's say, for example, any one point of time, you're going to do 5 trades, right? And you define that I would only have a risk exposure of 10% of my money, but each trade I only risk 2%. Okay, so therefore your total risk would be 2% multiplied by 5 trades would be 10%. Okay, so you have 100,000, 10% would be $10,000. Okay, so at any one point of time, you're going to risk $10,000. Okay, $10,000 would be your capital. So when you use this form to evaluate your risk, is more suitable for people with a lower risk profile. Okay, because then they only use X portion of their money. All right, and then they still have that remaining money they don't use as a backup. Okay, now the other type of risk profile is where you say, I want my loss to be 2% of my money for this trade. That's the difference here, because the first case is I want to use, right? Now, this second case here is you want your loss. Okay, so this is loss, this is use. Okay, so it means that when you have 100,000, the loss for each trade is going to be 2%. All right, now, so your risk would be 2% multiplied by the amounts that you have. It means that your risk per trade will be $2,000. All right, and your total risk would be the number of trades that you're going to do. Okay, so for example, you want to have $2,000 risk per trade. You're going to do at any one point of time 5 trades. Then you're going to be risking $10,000. Okay, so what is the difference from the first one to the second one? The first one say I want to use my money. Okay, so if you use $10,000, but you have a stop loss to say that every time when I lose 50% of the amount of capital that I have, that means that if I lose every trade, right, I put in 2,000. If 2,000 becomes 1,000, I will cut loss. Okay, I will terminate my loss, my risk. All right, and then I will salvage the remaining amount. All right, so the actual loss is actually lesser than whatever that you put up with. Okay, but when you say that I want to lose 2% of my money for this trade, all right, it means that your actual loss is going to be likely very, very close to the defined loss that you're going to have. So in fact, that you're going to lose 2,000, that means 2,000 is going to be what you're going to lose unless you stop it. All right, somewhere in between. Okay, so that's the two profiles that people can adopt. All right, now why is it important to match the risk, right, to your account size? Okay, so take a look at this person. He said that he or she said that I'm going to risk like 2%, okay, every time for my trade. So start out with a $20,000 account, all right? 2% for that trade, you're going to lose like 400 for the first one, okay? Then the second trade, still 2%, I'm going to lose like 392. You realize that for 20,000 account, right? When it keep on moving down, the number is still manageable because we are losing like 3-digit for each trade, assuming that you lose for every trade, okay? Now, if you take a look into another person with a $20,000 account too, but the person said that, hey, look, I want to lose and risk 10% for my trade, okay, which means that about $2,000 each time, all right? So look at the numbers. After 10 trade, this person still have 16,000 in the account by risking 2%, but this person only left with 7,000 each time, okay, if we risk 10%, okay, and each time when the loss happens is in the 4-digit region, okay. Now then take a look at the other account where this account is a 200,000 account, all right, and the person say, I want to risk only 1% of my trade. And now what is the difference here? Because if you take a look at 1%, right, it's gonna be $2,000, same as this $2,000, okay? And then this one will be 1,008. So therefore, the actual loss is the same. But look at the impact at the end of the day of the loss to the account. This person with a small account, all right, end up with only $7,748. But this person with a huge account will end up with 187,000. Okay, so ask yourself a question. If there should be a reversal, that means the market rebound, all right, and from the 11th trade, you're going to make money. So who is going to make the money back in a quicker manner? Okay, who is going to feel more stable in terms of that emotion? Who is likely going to continue to trade, all right, after that 10 losses? Okay, I think the answer is actually very clear. Okay, so it's very important to match your risk to your account size. Okay, so what I recommend is that, you know, if you have a 5-digit account, your loss should be 2-digit lesser. Okay, always like that. Let's say, for example, if I have a 6-digit account, your loss would be 2-digit lesser. Okay, that's very, very important. All right, so always you have 2 numbers below it. Okay, so you have a $20,000 account. You don't want to have a 4-digit loss. Okay, you want to have a 2-digit loss. Okay, of course, the first number does matter a lot, huh? For example, you have a $500,000 versus $200,000. That's still a big difference here. Okay, but I'm just talking about reasonable. If you start with 200,000, a loss of $2,000 is still manageable. It's painful, okay, I have to say this, but it's still manageable. All right, okay, so let me just talk into this risk management leverage. I want to share with you an experience. Okay, now if you are trained by myself, you will know that a lot of time I use leverage. Okay, and I borrow money from the bank. Okay, so this is something where not many people can do it. So please don't follow. Okay, in order for the bank to lend you money, you need to be of a certain status. Okay, you need to qualify a certain status. All right. So it happens when during the COVID, okay, the start of the COVID in 2022 during the March, right? So my relationship manager gave me a call. Okay, and I knew what is to come. All right, because I bought my portfolio with borrowed money. Okay, so what happened is that you know, if you want to buy a unit of bond, right, it's 250,000. Okay, so either you can come up with 250,000 yourself, or sometimes, or many times, right, the bank would say, hey, look, because of the status of the bond, that the bank will lend you some money. Okay, you will come up with some money, then the bank will lend you some money, and then, you know, that return from the bond will be much higher. Okay, we call that a leverage yield. Okay, now, so when my relationship manager called me, during March, I knew what was going to happen, because at that point of time, the bond yield, okay, what is the bond yield, right? The bond yield spreads, meaning that the ask price and the bid price of the bond actually open up, because people were so scared at that point of time, all right, that there is no buyer underneath, okay? So the bid price went so much lower from that ask price, okay? So if let's say I get into trouble, okay, and I need to force sell means that I sell it not willingly, okay, that's likely because I don't have enough money, right? So I need to force sell my position, okay? When you have a situation where the bid and the ask opens up, all right, then you realize that, you know, you're going to incur a huge loss because nobody wants to buy from you, okay? So when this happened, all right, the bank would call the investors and say, hey, look, you know, you need to top up money. Okay, top up what? They say they top up your margin. All right. So the first thing my RM called me was say, hey, look, Vinny, I'm so sorry. I need to talk to you. Now, the first thing I replied here is, okay, you just go ahead and deduct. She was so relieved. Why is she deducting? She needs to deduct the money from my bank account. All right. So that, you know, you can top up the margin to sustain this position. Otherwise, you have to force sell. Okay, so this is where you need to have a proper use of margin and leverage. So let me just explain what this is, okay? And if we can use it properly, you're going to find that there's a lot of opportunity to trade when you have more money in your account, okay? So when you have a leverage, it means that for every $1, all right, that you have, you're going to have that multiplier effect. You can have a 1:10. That means you're going to have a purchasing power of 10 times. Okay, so that's leverage because investors will use the leverage to multiply their buying power in the market. Okay, now margin means that you need to come up with an amount in your money, in your account to start trading first. Okay, so usually margin is like a collateral. Okay. So that you don't need to come up with the full amount. Let's say, for example, I want to buy this item. Okay, the item is $100. I don't need to come up with $100. All right. So if there's a leverage of 1:10, then every $1 is going to give me 10 times that power, right? Purchasing power. Okay. So if I have a $100 item, all right, then I need to come up with $10, and that $10 would be my margin. Okay, so if you can have a proper use of that leverage, then you're going to have that bigger purchasing power. Okay, so let me just give you an example here. All right, so if I have a leverage of 10:1, 1:10, right? So I have a capital, that means my capital is $1,000. My purchasing power is going to be 10,000. Okay, now let's say, for example, I make 1%, I invest this $10,000, okay, in stocks, and I make like $100, and that's equal to 1%, right? Okay, because 100 divided by 10,000 will give you 1% profit. But do you actually come out with $10,000? No, you don't. Okay, because under that leverage, you will be coming out with 1,000. Okay, and therefore, if you make $100, then your rate of return, okay, your ROI would be 10%. All right, but what happened during that point of time when during the height of the COVID is that because, okay, things drop, okay, so I need to come up with more money to top up my margin so I can sustain that position. Okay, so therefore, when you are using leverage, you have to be very careful. All right, it is your powerful sword, but it can also go against you. Okay. All right. So in other words, right, if you have a position size of 100,000, okay, and then you invest, if it goes up like 1,000, okay, then you make 1%. But if you have a leverage of 1:100, I'm not saying that you should do that. I'm just saying that this is the illustration to tell you that leverage is a double-edged sword. Okay. Now, so if you have a leverage of 1:100, your own money is 1,000. If your investment goes up to 1,000, right, you make a 100% returns. Okay, that's 100%, right? Versus somebody with 10,000, 100,000, makes a $1,000, only makes 1%. But likewise, if you have a $1,000 and then your investment dropped by 1,000 because you use the power of leverage to go and do something which is 100,000, right? Then you're going to find that you are negative 100. What does it mean? It means that you lose all your money. Okay, because you start with 1,000, you try to do a position size of 100,000, you're going to lose all your money once the investment dropped by $1,000. Okay, so therefore, leverage, as I emphasize again, is a double-edged sword. It will increase your gain, it will increase your loss, it will multiply your losses. Okay, so you have to make sure that you have enough margin and you have to understand the instruments that you are doing. Okay, all right. Okay, now this part, which is reward to risk ratio, is something that I want to clear up, and especially for people who are trading, because I have a lot of people who comes to me, right, and say, hey, look, what is the accuracy of your method? All right, but you have to understand this particular statement here. When we talk about accuracy, some people have only 40% accuracy or even 30% accuracy, but the person can be making a lot of money. Okay, can be making money over the long run versus somebody with accuracy of even higher, like 60 or 70%. Okay, why is that so? Let's assuming that you have only a method have only an accuracy of 40%. That means that out of 10 times, only 4 right, 6 all wrong. Okay, so that's a lousy thing. But every time when you have a win, you win $600. Why is that so? Because every time when you win, right, you win 150. Versus a loss of 100. So in this case here, we will call this reward versus the risk. Okay, therefore we call reward versus the risk ratio equal to 1.5. Okay, so if you take a look at the accuracy, all right, and then multiply by the number of win, multiply by the amount that you win. Actually, when you have only an accuracy of 40% under reward to risk ratio, you are actually break even. Okay, now which means that when you have an accuracy of 50% under reward to win ratio, that's where you can make into profit already. Right. In other words, right, if you can increase your reward to risk ratio of 2%, 2 times, then even under a 40% accuracy, you can make money. Okay, so when we look at trading system, we don't look at the accuracy, because accuracy is something which is very difficult to achieve, and I have to tell you from experience. All right, that means that when we put in a trade or investment, we just do not know whether we'll be accurate. So either we can keep on holding until we hit our stop loss, okay, or either that we say, okay, we have 10 trades, 10 tries, and then we're going to see which one is the winner. And if it's the winner, I'm just going to write that 2 times win versus my 1 times loss. Okay, so having a right mentality in terms of structuring your trading plan, it's very important. Okay, now one question, right, is how can you increase or decrease your leverage? I will cover that later on using CRMB platform. Okay, but let's cover a little bit on the position sizing. Okay, and I explain, right, position sizing in the trading plan is very important. Now, position sizing, you can use various ways to determine your position sizing. And in this aspect, I think, okay, personally, it's more important than the trading strategy. Why do I say that, right? When you look at a position sizing, you can either say that, okay, I have a fixed size, fixed lot size. Okay, for example, every time, regardless of what is that trade about, I only want to put in like $10,000 per trade. Okay, or I want to do 1,000 shares. Of course, this is going to affect, because when you are looking at maybe like DBS 1,000 shares versus, let's say, OCBC, that 1,000 can be very different already. Okay, so the other way, which I personally like it, is to use the percentage of equity. What is percentage of equity? That means that every time I release like 2% of my equity. So if my equity is 10,000, I lose like 2%, $200, right? Or you said that regardless of my equity, every time that I would have a fixed amount of risk, I will risk like $200. Okay, so my own preference is either this one here, all right, or this one here in terms of my trade. All right, and especially when you have this percentage of equity, when your equity goes up, then keeping that same amount of risk, right? The amount can also move up as well. Okay, so let's talk about okay, this one here. So give me a minute. Just now it doesn't want to move. Okay, here we go. Right, so let's take a look at this stock chart here. If the entry price is about 9.55, so this was SGX, okay? So if the entry price was 9.55, imagine that every time you do a fixed lot, which is 1,000 shares, all right? So the total invested amount is now 9,950, all right? So I just use a method to calculate my stop loss, okay? One of the very common method is to use the average true range. Okay, what is average true range? Average true range means that we assume that when there's a price movement, there is this range that the stocks will always behave. Okay, for example, the range is like every day the stock will move like up, down 30 cents. Okay, so we take the average price over a period of time, we calculate the high and the low, and then to come up with that range calculation, right? So it just happened that for SGX at that point of time, the range was about 34 cents, okay? So to calculate, for example, if you have 1,000 shares, what is your maximum loss? Okay, I'm talking about how do you determine the lot size, okay? So therefore, when you have a fixed lot size or fixed amount, you basically, you don't need to go and care about your loss, okay? Because you already fixed that lot size to 1,000 shares, all right? But if you have 1,000 shares, then based on this calculation where you say my loss is equal to my entry price, the price I've entered, minus my stop loss, okay, which is in this calculation here, a loss of 34 cents. So the loss amount would be 34 cents multiplied by 1,000. That would be the risk. Okay, so this is the first way to calculate a lot size. Basically, don't need calculate. You just put in every time I would just want to do a 1,000 shares or 10,000 shares. All right. Now, the second way of determining your position size is to look at your percentage of equity. All right. Every time you say, okay, my equity is 10,000. I want to risk 2%, right? So therefore, my risk amount is 2 times 2% times 10,000, that's $200, okay? So using that same stop loss calculation, this particular trade will have a stop loss of 34 cents, okay? So you use how much you want to risk. That means that this is your risk amount, divide by your loss, okay? So you take 200 divided by 34 cents, you will come up with 588 shares. Now, this means that if you buy 588 shares, ignoring your commission and other charges, if you hit the stop loss, all right, you would be losing $200. Okay, so you take the reverse way of calculation. You take the amount of risk, divide by your stop loss, you're going to get the lot size. Okay, now if you keep on doing this calculation, regardless of the type of shares that you are trading or investing, right? If you do this calculation, you're going to cap that risk every time to $200. Okay, so this is the second way, which is the way that I prefer, because I know how much I want to lose and I go and calculate my lot size. Now, the other way is the same, okay? It's instead of using a percentage of your equity, you just say, I don't care. I just want to lose $200 because $200 is my tolerance, okay? Anything that's beyond $200, I'll freak out. So I will just use $200. Okay, so you just take this $200, divide by the loss of this particular trade, and then you're going to get your, the position size. Okay, so question, how do you ensure that you can sleep well? How do you ensure that you have consistency over your performance? Okay, you do it via your position sizing. Okay, so just share with you, every time before we start to do the automations, right? We emphasize, very much on the position sizing. How do you calculate the position size? Okay, so we will only upsize. Okay, that means that, let's say, for example, this account has made money over a period of time. Then only when it has made money, hitting that threshold, then we will increase that risk level. So it's a very, very systematic way of doing. Okay, so for example, if this account using this method starts losing money, okay, then what do? Then we will reduce the risk amount until there's consistency coming in. Okay, so to make sure that you have the consistency, in your trading plan, then you can modify that via your trade size. Okay. All right. Now, one of the things, right, is after trade routine. Okay. So this is what I love best. That's why I love Friday. Why is it? Because Saturday, I don't need to see the trade. I'll be very happy. All right. Not because that I don't look at my trades, because there must be a live there, and then I go and trade and fight in the market right on Monday. Okay. So I like to keep my Saturday free. Okay. I don't mind doing lessons on Saturday because it helped me to, get to know more people. All right. To interact with the people, to understand them, okay, to talk to them. All right. But I don't want to look at the market on a Saturday. Okay. So, I mean, to be very frank, no longer I do this anymore. That means I don't do that after trade routine because, as I said, right, all these are all inside me. Okay, I don't keep a trade journal anymore. But yes, I did that when I was so much earlier in my career. Okay, but I do a lot of exercise. I do a lot of time off with my children. A lot of activities. Sometimes do I look at a trade? Yes, I do. Only if I have some questions coming to me, I answer my students, etc. Because the movement are all inside my head. Okay, meaning that if you ask me what is the price movement right now for these particular stocks, oh yeah, it's like that, it's moving like that, and I know it is that because I've looked at them quite long, enough when I'm doing the Monday to Friday trading. Okay. One thing I want to share, all right, is that I want, for the weekend routine, all right, to be thankful. Okay. Why do I say, and I want to be thankful? A lot of people ask me how much you're making. Are you able to have a recurring income? Do you need to work, etc.? Right? Yes. All this. I mean, I said already, I don't need to work. Okay. But I'm very, very thankful because there are people that I've worked with. There are people that train who doesn't make it. All right. Who gave up. And I'm very lucky to have a lot of support from my friends and my family, all right, to do whatever that I want to do right now. Okay. So I'm actually very thankful. All right. So I told my students, I say, when you make profitable trades and we have a profitable month or profitable week, right? I told them, don't celebrate. Okay, don't go and splash and then go and eat a $1,000, $2,000 dinner or meal, right? Don't go and boast that. All right. Keep it. You can celebrate. Just go and buy yourself something nice. Okay. Be thankful that this week is a profitable week. This month is something profitable. Okay. So this is something that I sincerely want to share. All right. Yeah, that's it. Okay. Now, what I like to do is that later on, just forget this one here. Later on, about 8:15. All right. Fokwan would be talking about how you can put it all together. That means I've explained and I shared my stories already, how you can put them all together. All right. And then there could be some Q&A. All right. Just want to quickly talk about how I screen for trades. Yes, I do a lot of automations. In fact, the screening are all automated already, but I do keep a watch list. Okay. I do have a watch list and I scroll through my watch list. All right. But you can do few screenings. Okay. You can either do the descriptive screening, fundamental, or you can do the technical screening. All right. So if you go inside the SGX website, there's a stock screener. All right. You can define, for example, different criteria. For example, the PE ratio, the U%, and then they can screen, and then you can come up with the stocks that they want, even to select into the different sectors. All right. If you go into CGS, CIMB platform, right? You go inside this place where they have a filter list, okay, under the screener here. So this one here, they have the watch list, and then they have this screener here, right? Okay, click on that. You're going to find this descriptive, fundamental, and technical screening. You can just define what you want in terms of countries, in terms of different sectors and the capitalization. And then you can just click that and then to screen, stocks that you want. Okay, so that's another platform they can do. This one here, just to quickly says, gives you the type of screening that can be done. Okay, so they're really very useful, especially if you are interested to do fundamental and especially on things like the dividends. Okay, one question that asked about the hedging, the dividend yield. I still don't know where that slide is. Okay, never mind. Let's continue. Okay, now one question that asks how to increase or decrease the leverage. I would probably just pass that to Fook Kwan to answer. All right. You can in Singapore when you are doing certain instruments. All right, that leverage that you have is almost fixed by regulations, but then different instruments, all right, in the same class, let's say in the stock class or the CFD class, right? In that same class, you're going to have different leverage, okay? So for stocks, different stocks, you can find, for example, the banks would have a, lesser requirement for margin, okay? Now, let's talk about quickly into hedging. Okay, so this is also an approach which is not very, very common in Singapore. But when we do a lot of all these automations, then it is, okay, because the machines are able to do that, all right? So what is hedging? Hedging means that, for example, if I am bullish into a particular stocks, okay, I like to buy these stocks, right? But overall, the environment is bearish. So in order to make sure that I don't lose a lot of money, I can long a stock and I can short an index. Okay. So for example, if I want to, there's these things I want to talk about because, recently, there was this trade that I did, which is a Hong Kong trade, right? So I had that stocks already. That means I already own that stocks and the earnings is coming. Okay. So what I did is, because I own that stocks for dividend. So I long that stock. I don't want to give up that stocks, okay, because I actually bought it at quite low. But technically, it is going to drop, okay. So what I did is that I actually short the stocks with CFDs, okay, with that derivative instrument. So when I short the stocks, okay, it actually drop. So by dropping, the shorting side win the money, but then I lose the money with the long side, right? Okay, because I make less money. Okay, but I think the long term is actually going to go up. So what I did is I profit short term from that short term selling of that stocks. Okay, so you can do the hedging in this manner. And I think that the more common hedging would be long a stock, short a stock, or long a stock, short an index, or the other way around. That means you short a stock, long the index. But it's more likely to be long something, short something. So you always start off with a long something. Okay. Okay, now I've completed my section already. So I'm just going to pass my session to Fook Kwan. All right, we'll be talking about the trading plan, okay, the sample of the trading plan. So Fook Kwan, are you ready?
Yes, thank you, Bini.
Okay, that's good. All right, please take over.
Okay, so I think some of you guys might be finding this very bizarre that we start off this webinar going into talking about losses, talking about managing losses, because most people that you find out there straight away, they'll be telling you how much I made this week, how much I made this month. They'll be stacking their monies, putting it beside their head, showing you what kind of what's a trader lifestyle. That one is use that for motivation, but don't use that as what you think is going to happen. Okay, very quickly, I just answer two quick questions here on YouTube here. One first by Uwu. By automated trading, do you mean the use of AI? I think I believe, Bini, correct me if I'm wrong, but when you say automated trading, you are probably using just some customized indicators and auto.
No, actually, I make myself. It's AI. So my job includes developing AI for myself, my students, and also developing for fund houses, family offices, etc. Yeah.
Cool.
So that's the other part. So we created very massive automated trading. So it can be semi-auto, it can be fully auto. Yeah.
Okay. And then lastly, will the slides be uploaded on the Telegram channel? The short answer is no, but this recording is going to be on YouTube, so you can watch it again and again and again. Okay, so some of you might be wondering then right now at this point, what is the best time frame and what is the best strategy and what is the best trading plan there is? Because if there is If somebody has a system, I just follow theirs. I just follow what is the best strategy and I'll make money. Right. The short answer is other people can doesn't mean you can. What does that mean? It means that trading plans and trading strategies should meant to suit your understanding, your psychology, and everything that is your own pattern. Because what can be done by one person not necessarily can be done by another. Okay, so I expect some of you to have more than one trading plan, one plan per strategy. So you may have one plan to trade stocks for breakouts, example, that's one plan. Or you have one plan to trade stocks when the SPY has dropped 2 days in a row, for example, right? Later, I will drop these samples and template onto Telegram. So the idea here is that you do your homework first before the start of the challenge, right? You study some price charts, look at the past behaviors, do your screenings. Do certain stocks tend to react differently? What is the range of these stocks? What do they have in common? Then, during the course of the challenge, you will react to what the market gives you and execute your plan. Now, very important thing here to note is that you will react, not expect. Where most people fail, right, is that they anticipate where the stock is heading. They buy a stock thinking that this stock is going to shoot to the moon. Bitcoin is going to go to 100K. Yes, maybe it will, maybe it will not. But what people fail to do is they don't react. They don't have a plan for reaction. Now, what I mean by that is they don't have a plan where they say, if the stock does this, I will do that. If it goes up, I will do this. If it goes down, I will do that. If it goes down some more, I will do that. So think of a plan, you need to think of all directions. Like the more detailed you are, the better. Now I'm going to share some examples with you. First example over here, this is a very simple example. Yeah. So we start with stock selection, right? You think about what stocks you want to trade. So in this example, I predefine that I will trade the STI basket or the Straits Time Index basket, which is the 30 stocks that make up the Straits Time Index. Now, what will be in my watch list? I am looking out for pullback trades to support for long trades or retracement to resistance for short trades on the daily time frame. For some of you who don't understand, if you think all these terms are very technical, what is pullback to support, what is retracement to resistance, Google's your friend. All right, next, there will be, so you have a stock selection, you got watch list. Next, you got an entry trigger. Entry trigger, you'll say things like, I will want to see a rejection at support for long trades or a rejection at resistance for short trades. Example only. So again, if you don't understand what it means, rejection at support, rejection at resistance, Google will do a very fine job explaining to you. Next, you're going to think about your risk management. You're going to think about where will your stops be. Will it be at the highs, at the lows? Is it going to be 1% of your capital, or is it going to be like a fixed position? Right, that's what Bini covered in the earlier segment of the slides. Then we're going to think about your trade management, right? If the stock gaps up, what am I going to do? All right, will I exit full position or will I exit partial? If the stock drops lower, what am I going to do? Am I going to, do what? So in this example, I quoted, if the stock starts to print a large volume sell bar with unexpected negative news, I will exit my trade even if it does not hit my stop loss. If it trades sideways, I will change nothing. And I will only exit if it hits my stops or my profit target at the next resistance or support. So this is an example of a short, simple trading plan. Simple as in, I don't think that this is very detailed. This is just very simple. You think about what is your defined list, what you're looking out for, what defines your entry, how you're going to manage your risk, your position sizing, trade management, when the stock starts moving, what you're going to do. All right. Bini, can you bring us to the next slide, please, for the next second example? Okay, second example, US market. I call this a breakout trade. Breakout trade is example. So stock selection, in this case, I predefine, I say that, hey, I will only trade market cap, high cap stocks, those market cap above USD 10 billion and above. So watch list, what am I looking out for? I'm looking out for tight range consolidations. I'm looking out for at least 4 days consolidation at the end of a short-term trend. So yesterday we covered trend with Tom, right? trends can go for as long as back to 2020 or the trend since the start of the year. In this case, I define short-term trend as the past 10 days, right? Entry trigger, what is my entry trigger? 2 ATR above range low. ATR stands for average true range. Am I going to plant my entry above or below average true range? And risk management, again, risk management, how much percentage am I going to risk? Am I going to risk X amount or what? In this case, I'm planning to let this position represent 15% of my total portfolio exposure, right? The earlier example, I was quoting an example where I will risk 1% of my position. So right now, I'm going to say that I'm going to risk 15% of total portfolio exposure. That will allow me to have a total of 5 positions in total. So I will not, throughout this, if this is my trading plan, right, I will not hold more than 5 positions at one go. That's one example. Again, no right, no wrong, no better, no worse. See how better and how good you can manage respective to your own skills set. Now, trade management here, I will use RSI as an entry, as an exit indicator. If RSI is oversold to the long order on consolidation and overbought to place a short order on consolidation, and I will then exit the trade when I have achieved 3 times of my risk. So I define that I risk however much I risk 15% of my total portfolio exposure. If I make 3 times that amount, then I'm out, right? So again, this is a sample of what to be inside your trading plan, what to think about, what to consider. Next slide, please, Vinny. Okay, so this is a template. I will upload this into Telegram tonight. There is no rush for you to finish your trading plan tonight. In fact, I suggest that you finish all the webinars before you finalize your trading plan. This will be due by the 28th of September. Late submissions will not be entertained. And this will form part of your 40% in risk management in the grading. Details on the submission of trading plans, how to submit your trading plans, we will follow up with you on Telegram. And okay, that's it for me. Let's see if you got any questions here. Where can we get your algo? Where and how did you become a full-time trader? How to write a trading journal? Okay, I will leave Bini to answer the algo question. How to write a trading journal? Okay, that will be covered in a webinar that I am doing that is actually called Putting It All Together. I did just put it all together just now, but I am actually conducting another webinar that is literally called Putting It All Together, putting all in the sense of the bigger picture, putting everything in this whole financial challenge together, which will be next week. So keep a lookout on that. I am done on my side here. Bini, back to you.
Okay, thank you. You're interested to get my algo. Unfortunately, you have to pay for it. All right, because the algo has very extensive development. All right, and we are always upgrading that, updating the codes, etc. So you have to pay for that. So again, search for my name. All right. Some of the algos that I did under NDA, I can't disclose it because they belongs to some of the big guys out there. All right, and a part of a team who do that. When and how do you become a full-time trader? When? I cannot remember the time. But I started trading in pre the financial crisis, right? In 1996. Okay. All along I'm from one of the better schools. Okay. I mean, better school means the top 10. So by right, we should be studying. But when I was doing my JC, all right, I was actually trading already. But I stopped for a while when I went to university. But I started again when I was in the university, when I realized that everybody was just, not everybody, but many people in the uni, they were looking at teletext. And that's where I found some, I wouldn't say buddies, but people to be in the same like-minded and then to trade together. Okay. I went through a tough patch, not to say it's easy, because in the initial stage when I recovered, because I have to pay back the money that I lost, right? So a lot of time actually just to press the IPO to get that $1,000 or $2,000 and slowly to pay back the money. All right. Then I did my master's, and then I really have a lot more time to trade. And after that, I thought that I should just work. Okay. And I work very hard to the point that when during my puberty, I don't have pimple. Okay. Never had a single pimple on my face, right? But when I was working, I had like a breakout of tons of them. So it came to dawn on me to say, hey, look, there's a lot more that I can do than to really, work. All right. And then I'm also one of the pioneers in the technical analysis in Singapore. At that point of time, it wasn't really very popular. So I worked on some development of some software, etc. And I helped some houses do the goals right in TA. So some of the TAs that maybe you might see or your parents might look at could be written by myself. Okay. Then that's where a lot of people asked me to train them. So I started training. I started off more into the corporate training, okay, corporate training. Then after that, so when was I in corporate training? I think it was 28 or 29 years old. So my people whom I train were in the 40 to 50. So they don't believe a 28 to 29 years old, especially ladies, right, talking to them about trading. Okay, but at that point of time, I was also trading quite aggressively already. Yeah, and then when did I semi-retire? When did I retire? At 35 years old, for 3 years, and I came back to train again, to work again. If you ask me, right? I mean, if you ask other people, hey, look, you're making a lot of money already, right? And then how come you are coming back and train again? All right, are you making a loss? I tell you, to me, I don't buy this. Okay, so they don't understand what it's the purpose of life. Okay, I want to say it this way. All right, so because the 3 years, not only that I call my friends, I also have to take care of my children. Not easy, So I finally decided they should belong to the childcare. Algo trading consists of math functions. Yes, we do a lot for that. Yes. In fact, that TA is also part of it, but we have a lot of math inside. Yes, because one of my majors is actually statistics. All right, but I don't do any of the coding. Okay, because I only do the logic and the back testing and the forward testing. Because the programmers involved, they are genius, okay, in the coding. All right, I can only look at some simple codes and that's it. All right, and then work on the logics, but the others I also don't know. Okay. How long until you found it profitable? I had a rough time. Okay. I only found it profitable only when I changed my style. All right. So I started off, you look at what I'm trying to say. I started off with actually scalping, which with late night trading, with aggressive, trading. Okay. There was also a point of time, right, that I was partial profitable enough to move out of my house and to rent an office, right, just to trade. Okay. At that point of time, the rental wasn't that expensive, but it's still quite significant. Okay, but I realized that after a while, suddenly I cannot move my fingers. Okay, that means that why is it I cannot move my fingers? It's because that I've been trading that long enough, right, to put my hands on the mouse. That my hands actually froze. Okay, and I know that this shouldn't continue. All right, so I changed my style because one day I can be making $8,000, but the next day, I realized that I totally froze because then my mind and my body became so tired. So I asked myself, right, what's the point of making the $8,000 when the next day I'm totally flat? Flat means that I cannot even function as a person. All right. So I did a bit of a change, all right, where I use a slightly higher time frame. All right, and I trade more regular hours. That means that those instruments that are wait hours to me, right, that I can't sleep. Like, for example, the US market, when you trade the futures, this is actually wait hours because sometimes the indexes only starts moving, right, only at 12 and 1, and sometimes at 2, and I have to wait until 2 o'clock. I can't stand it anymore. Okay, and that's where I start to move a lot of my trading into semi-automations. Okay, what is semi-automation? Semi-automations means that I still make the decision on what to trade. All right, but I outsource that menial work. What is menial work? The calculation of lot size, that placement of stop loss, all hard-coded as rules. Okay, into the algos, and then the algos will handle shifting a stop loss, trailing a stop loss, taking profit, etc. That means when what Fok Wan said, right, as you exit when it's 3 times your risk, right? That means you make 3 times that of your risk. Okay, many times when you see that, human will say, okay, I think it will go again. You hang on, and then when you hang on, you realize it will turn the other side. But when you outsource this to automations, then you realize that, okay, 3 times means 3 times, okay? Because the machines work on mathematical formula, okay? 1 + 1 is definitely equal to 2. It's not going to be 2.1, all right? So when this happened, that rules came in, and you realize you're a lot more profitable, all right? Because then even the point, right, that you want to not to cut loss, before you even think about it, right, the machine already cut your losses for you already. And it's, oh, what am I supposed to do here? I already cut loss. But then the machine cut for you. And then the next moment you say, wow, if I didn't cut loss, I would have just incurred so much losses. Okay, so when you have to find something that suits you. Okay, I so happen to be very much very, very mathematical, very, very scientific person. I mean, all my students will know that I read that refrigerator fine prints when I buy a fridge, or that fine prints when I buy a TV, right, or buy anything. Okay, because I'm this type of a precise person, and that's why I love that precision I have, right, when I do my trading. Okay. What stocks do I recommend us to look into? I mean, for your competition. Okay, because for stocks, right, you can long and short. Okay, so if you want to look into the strongest market, all right, right now it's still STI. If you look at Singapore, Hong Kong, and US, right, the strongest market is still STI. If you want to do a long strategy, if you want to do the short strategy, then the weakest market is actually the Hong Kong market. Okay, the only thing is about Hong Kong market is that it has dropped for quite substantially already. A lot of stocks are actually very, very low. So when you short, right, it doesn't have that leeway to do that. Okay. So I won't suggest that you go against the trend, right? But in this case, it brings into then if you still want to long, but then long at a bit of a discount, then the US market will still be a lot more favorable. Okay. What platform do you use to trade? Day trade, it depends. Because I do a lot of instruments, okay, partly because of automations. When it's futures, because I also have a IBF, Institute of Banking and Finance course with IBF. So that's trading into the futures. So we're using the futures broker. Then when it's the Singapore stocks or the Hong Kong stocks, right? Because this is from CIMB Securities, I cannot let you know what I'm trading also. So I would say that you go for CIMB Securities. Then if it's the other instruments, like I'm doing forex indices, commodity, gold, etc., I'm using my own broker. You can just explore a little bit. How do you get your profit when your trading is automated? How do you get your profit? When the trading is automated, right, it doesn't change if you manually trade that. Okay, because it just means that one part is being replaced by machine. Okay, just give you an analogy, right? Last time, I'm not sure whether you guys ever sweep the floor. Okay, I remember last time when I was young, I was staying in the kampong. My mother would just ask me to sweep the floor. All right, so we just use this broom, and the broom is actually made of coconut husks to sweep the floor. So that's manual, right? But now, you just have to press that vacuum robot, right? And then you just vacuum the floor. Okay, you don't even need to go and vacuum the floor yourself. Okay, but what you have to do is you have to go press the button to ask the robot to go and vacuum the floor for you, right? Okay, and you can program the time that the robot should start vacuuming. Okay, so this is that automation I'm talking about. No longer you have to go and vacuum the floor yourself. Okay, so no longer you need to go and put in the trade yourself, but you have to define the rules. Okay, and you say that if 1 + 1 = 2 and that happens, then you're going to do the trade. If this doesn't happen, I'm not going to do the trade, something like that. Or if that happened, I'm just going to get out the trade. So for example, if I lose 2% of my money, then I should be out of the trade. All right, so that's where the automation comes in. So if your method make money, all right, then the automation will collect your money by taking profit. Okay, all right. So I think that's all the questions we have already. I just wish you guys a lot of luck in the competition. All right. And trading is a long journey. There are people I've known, right, really make a lot of money, seriously. But there are also people that I've known who doesn't do well. Okay. So the first thing you need to do is to understand yourself. Okay. Try to have a mix of trading and investment. And very important, do up your trading plan. All right. So I pass this back to Fook Kwan.
Yes, thank you, Binny. Now, you guys have heard Binny from the earlier part of this conversation until the middle part that she said that scalping doesn't work well for her. Having said that, does not mean that scalping is a bad strategy. And also, having said that, I'm not encouraging you to go and learn. I'm not encouraging you that scalping is the first thing that you learn. But there are people out there who are insanely profitable at scalping. People who make $2,000 to $8,000 a day on scalping. It's possible, it can be done, but scalping does not suit Binny, and also it does not suit me also. So again, strategies why this kind of thing, it really boils down to individual. Does not mean that it is the best, the most, you can milk the most out of the market thing you should. It does not mean that just because you can milk the most out of the market, you should do it. End of the day is, can you handle it? All right. And for all of you who out there who haven't started trading yet, you probably don't understand what I mean by when I say by can you handle it. I guess you only understand this when you actually start to get your feet in the water. Let me just very quickly answer this question here by In Liang. Account details will be given out on the 16th. Later submission of the trading plan is on the 28th. What happens in between? Can I tweak my trading plan during this period? That's why I don't encourage you to finalize your trading plan so soon, right? You can keep it until the last minute on the last day, 28, then you submit your trading plan, because whatever it is. And also, if you are not very sure of what to do, then don't for the sake of scoring more points, go and tighten your trading plan until such a definitive criteria that you are restricted by certain things. I mean, if you don't know, if you're fairly new, it's okay to keep a broader picture, right? So the best strategy is the one that makes you profitable. Yes and no. The best strategy is one that suits you the most. Again, this is a very simple sentence, but for new people, it's very hard to understand this sentence. I also, last time when I just started, I also think to myself, I just need to learn what is the best strategy and I can be profitable. I don't care how difficult it is, I'll do it. But when you actually do it, you realize what it means by find something that suits you. It's really hard to explain this until you tried it yourself. Yeah. So that's it. That's all the time we have for today. Thank you everybody for joining, and keep a lookout on Telegram for the next updates. Thank you, Binny, for your time. All right.